Today we're talking about the most popular investments, GICs, your banks may have offered you, usually in a term, 3-year, 4-year term. But what separates GICs from other investments like stocks is that it is not tied down to the volatility of the stock market. GICs is what is rare when it comes to investments, and that is certainty. GICs offer you the opportunity to invest that will guarantee that you get your principal at a certain time, and also consistent payments throughout the term of the investment. In this discussion, we're gonna look at when a GIC would be the best time for you to use it as part of your overall goals and financial strategy to achieve what you want to achieve. But first, make sure to hit the like, subscribe, or drop a comment down below to show the channel some love. My name is Leon Mann, and I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hardworking individuals add an additional multiple 6 to 7 figures to their retirement portfolio. And I also, more importantly, help them to protect the hard-earned money during retirement. Now, what is a GIC? A GIC is a loan made out to the bank. So instead of taking out a loan, it's the other way around. It's like giving the bank a loan. In exchange, what the banks do, the banks will pay you out interest. When it is done, then you will receive the principal plus the interest payments. This makes it so appealing. The good thing about a GIC is that unlike stocks, it is not tied down to the volatility of the stock market. So in bad economic times, for example, your GIC will not be affected, but you will be guaranteed to receive the interest payments. And you will know when you'll be able to receive your principal that you have put down on it. Another thing with a GIC is that with reputable financial institutions, what happens is that your investments are protected by the CDIC, the Canadian Depository Insurance Corporation. This protects your deposits whenever you put in your deposits for a GIC up to $100,000, right? So basically, it is safe to use a GIC and your deposits are protected and it is secured. Now, when is the best time, you may be asking, to use a GIC? You can use a GIC for short-term financial goals. Most notably, if you're putting in a down payment for your house, you can use it for home renovations. You can use it when paying down your kids' education. This makes it very appealing, especially for short-term goals, because you're not tied down to the volatility, but you're more able to preserve your capital and you're able to build on it by receiving the interest payments. Now, another thing with a GIC is that it's for people with low risk tolerance. For example, people who invest in high-risk investments, they may not be able to sleep well at night. And especially during volatility and tough economic times, their investment can really be down. GIC is best used for retirees. When you're retired, you don't want to be subjected to high volatility. And with a GIC, your payments are guaranteed and it becomes more predictable, right? So if you are on a budget, a GIC would be something that you can use because you know exactly what's going on. What a GIC may not be suitable for are long-term investments. We're talking investments like 10, 20, and 30 years in the future. In this regards, a diversified portfolio with segregated funds historically have performed better when compared to GICs. So for long-term investments, like 10 years and above, then you're better off going with a diversified portfolio of growth funds and segregated funds, because these usually would perform well. The idea is to know where every dollar is going into, right? You want to assign every dollar a value and every dollar a purpose. A good financial plan is not tied down to just one investment, but it's multiple investments that are assigned a specific goal, whether that goal be short term or whether that goal be long term. Every one of your investments inside a financial plan has a purpose. A GIC is not sexy. A GIC is not gonna get you rich overnight, but it will provide stability, security, and more importantly, it provides more reassurance inside a well diversified and balanced portfolio. And sometimes that may be all your investment portfolio need. By the way, if you like more information on topics like these and other wealth building and financial strategies and with money in general, be sure to follow for more because I will be dropping a lot more topics with regards to wealth building. And if you found value in this presentation, by all means, feel free to hit the like, subscribe, or drop a comment down below if you want to show the channel some love. And until next time, I will see you in the next episode. Until next time, peace and love, and take care of yourselves.